Hey guys, to those of you guys who do not know me, my name is Donna and I am a childcare CFO. And what I do is I assist childcare owners in making sure that you guys are not paying more than your fair share in taxes. And I also assist you guys by making sure that you are increasing in revenues on an annual basis with strategic financial management. Okay, so what today's video is going to be about is a very hot topic that's going on right now in regards to taxable grant income. Okay, childcare owners are receiving different types of taxable grant income, whether it be from their state, whether it be from their city, and they are very appreciative of this grant income, but they feel like the reward that they're receiving is definitely going to hunt them or is hunting them during tax time. They feel like this grant income that they're receiving is providing them a great benefit in how they're operating their childcare, and just that great incentive for keeping staff on payroll and keeping staff active and keeping operations ongoing during the pandemic. Even though, like I said, you guys are very appreciative of this grant income, you feel that it's going to haunt you during tax time, or it may be currently haunting you in regards to your taxes. So what I do want to say to the childcare owner, I do not want you guys to bypass any type of grant income, taxable or non-taxable, because I do want you guys to look at it as, hey, it's free money. And the reason why I keep saying it's free money, because there are ways that you can offset the taxable portion of any type of grant income you receive. And if the entire grant is fully taxable, there are strategic ways that you can offset the income and lower your tax liability. So this is not something that I want you to be afraid of. I definitely want you to continue to go after those grants, get the grants to help your operations, to benefit your operations and get you to that level of success in your childcare that you're aiming for, okay? So what is today's video going to be about? Today's video is going to be about 3 ways that you can offset your taxable grant income, okay? So the first way that you can offset your taxable grant income and lower your tax liability is what we call qualified business deductions, okay? So the grant income that you received is to, of course, input into your operations, into your childcare operations. So you may purchase things such as different types of equipment. You may purchase research supplies or supplies, just miscellaneous supplies for the childcare. There may be things such as professional services that you pay for during the year with that particular grant. There may be some type of advertising and marketing. Anything that you do business related in regards to that taxable income that is used for business activity, you can deduct that against the grant income, which will significantly lower your tax liability, which is why I say, guys, there's no reason to be afraid of receiving taxable grant money, because the money can be offset. Your taxes can be lowered with, strategic management, such as the qualified business expense deduction. Okay. Another way that you can reduce your tax liability on taxable grant money is through amortization and depreciation. Okay. So for example, I'm going to use this childcare stabilization grant for an example, because this is a grant that is currently active that a lot of childcare owners are receiving, first round, second rounds, and third rounds. And what's going on is that with the grant monies, you can buy or you can purchase different types of fixed assets, such as playground equipment, such as miscellaneous generic equipment for your childcare, such as software and things like that. Well, the good thing about this is that you can depreciate what we call fixed assets over the life of these particular purchases, okay? So when you're depreciating the cost of these purchases over their useful life, what does this do? This indeed reduces your taxable income, okay? And it's called depreciation and amortization, all right? The next thing that you can do to offset the income from your taxable grant monies is called loss carry forwards. So how does that work exactly? So let's just say your child care experienced a loss in previous years. So what you can do is you can take that loss in previous years and carry it forward to the current year that you're in, and those losses can be used to offset that taxable grant money that will reduce your tax liability. Now, I went over 3 strategies such as qualified business expenses, depreciation and amortization, and loss carry forwards, but there are several other strategies that you can also use to offset your taxable grant income. Okay, so guys, please do not pass up this grant income because you're afraid that at the end of the year the taxes are going to haunt you. Definitely consult with a financial professional if you feel like you're in this situation and you find yourself kind of afraid to take on this particular grant monies because you're afraid of the tax implementation, simply because you do not know how, strategic ways that you can offset this income. Again, definitely consult with a professional financial or financial professional. My tongue is twisted because you definitely don't want to overlook this money. This money is definitely going to help you in regards to your operations. That's what it's there for. Specifically speaking, in regards to the Child Care Stabilization Grant, that money was assigned to child care owners specifically. No other industry gets the Child Care Stabilization Grant income. And it was designed because you guys kept on staff during the pandemic, during some, very disastrous times. You guys still were in operation and you kept on, you kept your staff on board. And it's just an incentive. It's just a reward to you for doing that. So you definitely don't want to pass this monies up, as it can definitely help you reach whatever type of goals that you have for your child care, whether it is that you want to expand or you want to purchase another child care facility, what we call acquisitions and things like that. Maybe you want transportation for your child care. Maybe you want to give your staff a bonus, but definitely, I encourage you to do not pass up any type of grant income, taxable or non-taxable, as there are very strategic ways that you can offset this income and lower your tax liability. So no need to worry about that. So if you are a child care owner and you find yourself in a situation, as I always say, every child care is different, the operations are different, so it's very important to consult with the financial professional. And if you are that child care owner and you find yourself in a situation to where, hey, I need some help, I received, several hundreds of thousands of dollars for the Child Care Stabilization Grant, and I need some help, a tax plan, I just need some financial assistance on how to offset this income to lower my tax liability, there will be a link below this video. Go ahead and click the link and book a free 15-minute strategy session with myself, and we'll definitely assess your situation. Because guys, I really do not want you to, bypass this grant income, because there's going to be more taxable grant income that comes along in the upcoming years. And just because it's taxable, that does not mean that it's a bad thing. It's a very good thing. This is free money that you don't have to pay back. And with the, with the correct financial guidance and advising, you can definitely make sure that you offset this income and lower your tax liability. So thank you guys for watching, and I will talk to you guys soon.